Good afternoon and welcome to our FBF online seminar. My name is Pierre Schlosser. I'm the scientific coordinator of the Florence School of Banking and Finance. And it's a real pleasure for me, even in these very difficult times, to welcome you all to today's FBF online seminar on state aid in the context of COVID-19. I'm very glad to welcome our speaker of today, Ramona Ianus from the European Commission's DG Competition. I will not guide you through Ramona's biography, as you can find it on our website. Just to say that today's seminar is part of our FBF online event series on the coronavirus outbreak. And let me try and give a few words of background, and then specifically more on state aid. We all know how essential state aid is to ensuring a level playing field in the European single market. And let me share with you that I remember a professor of mine once telling me, however, that state aid is only one of the 5 fingers of EU competition policy, the other 4 being the ban of anti-competitive agreements, collusion and cartel, the abuse of market of dominant position, merger control, and the regulation of services of economic interest. So perhaps keep that in the back of your mind. Having said that, and before entering into the interesting presentation and clarifying Q&A of today, I'd like to inform you about our school's upcoming activities in 3-4 minutes. The Florence School of Banking and Finance is part of the European University Institute, EUI. The EUI is a very distinctive place. It's a public, intergovernmental research and education institute which boasts an international community of more than 60 nationalities. It offers doctoral, postdoctoral, and executive education programs in economics, law, political science, and history. As of September, the EUI will also offer a 2-year master's degree in transnational governance as part of its newly established School of Transnational Governance. The Florence School of Banking and Finance is a recent program of the European University Institute's Robert Schuman Center, of which you have seen a video. It's a place where various generations meet to discuss and argue about cutting-edge topics of financial stability and macroprudential policies, risk management, as well as regulation, supervision, and resolution. Our school holds both policy debate and training activities, residentially and online. You can find more details, of course, on all of them on our website and on LinkedIn, but let me just flag a few of them which could be of interest to you in this period. Well, first, I'd like to inform you about the launch of our online course on the regulation and practice of securitization. The course will be held from the 8th to the 22nd of May. The online course faculty is made up of both academics, senior industry practitioners, and senior policymakers, and will provide you with a solid overview of the regulatory and practical dimensions of securitization. It will also close up with a module on green securitization that will bring you very close to the frontier. There are still a few seats left, so do not miss this opportunity if you're interested. Before I forget, also, if you need some reading tips for the weekend, think of our ebooks. They are all available for free on our website. Lastly, there are 2 sets of activities I would like to flag to you. The first is our autumn residential courses, which we will have on fintech, digital currencies, bank resolution, and climate risks, among others. The second are 2 other sets of EUI activities on the COVID-19 outbreak. On Monday at 2 p.m., my colleague George Papakonstantino will host a discussion on pandemic economics with CPR's Richard Baldwin and Harvard-based Megan Green. And then on Friday next week, still at 1 p.m., our next FBF online seminar will be zooming in on the European fiscal response to COVID-19. I'd like to finally mention to you that in these times of epidemics, you may consider also having a look at the recordings of our past online seminars for further stimulation. Like our ebooks, they're actually both accessible on our website for free. So I think it's time to introduce you to one another before giving the floor to Ramona. So you're around 400 participants connected today, following us from almost everywhere in Europe and from several other continents. 58 nationalities are represented with a good mix of public and private actors in the room, with a record number coming from the European Central Bank. We are 1% short of gender balance. You have about 8 years of professional experience on average. This time, 43% of you are economists, and we have 33% of you are trained lawyers, and then we have different sets of backgrounds. Lastly, 71% of you have a master's degree, while 23% of you have a PhD, and 6% have a bachelor degree. So I think it's time to start now, and Just to give you some elements of structure, so Ramona will speak for about 20-25 minutes. Our talk will be punctuated by a few interactive polls. And following this, we'll open the Q&A session where we will first address the questions sent to us in advance of the seminar, and then we'll have a chance to, you will have a chance to write your questions or comments in the chat box that will appear at the bottom of your screen. Lastly, words of thanks to my colleague Jan, who has supported the preparation of the seminar and is managing the platform right now as we speak. With no further ado, I will give the floor to Ramona, who is, I guess, in Brussels. Here it's really sunny in Florence. It's a pity we can't really go out, but I hope that the situation is okay in Brussels. And I leave the floor to you. Thank you again.
Thank you. Thank you very much for the seminar, for the invitation, Pierre and Jan, for organizing this. Thank you all for participating. It's impressive to see how spread we are and still together today in this moment. So I would like to go to present a bit what the Commission has done in this 3 weeks now. A bit of statistics, how many decisions we have adopted, and then to answer your questions. I think it's important before we start to set a bit the scene. I will not talk about the impact of COVID on the economy. I think we all know that by now what the impact is or will be. But I want to explain a bit in which legal framework we are and what the possibilities are, and what the Commission has done. State aid rules is one tool that member states can use to tackle the situation we are currently confronted with. However, the state aid rules as such have a purpose of ensuring that the internal market is not fragmented and that there is still a level playing field during the crisis. So the role of state aid control in Europe is to ensure that the measures the states are taking, the governments are taking towards the economy, towards companies, benefiting certain companies, are indeed effective. They reach their objective. They remain proportional to the objective. And also a very important aim of the communications of the Commissions adopted, the rules adopted in this period, is to set out a framework that allow member states on one hand to be effective with their measures, but also to allow companies to bounce back from the current situation. So when we designed the rules, we had these two objectives in mind, of course, together with the overall aim of state aid control to ensure that the internal market is not fragmented and that there is a level playing field and that there is no harmful subsidy raise in Europe to the detriment of the cohesion objective. So the Commission has issued a communication first on the 13th of March explaining the different possibilities member states have. And a lot of emphasis has been put, and member states have done that, have adopted general measures that fall outside the remit of state aid control. For example, member states have suspended some tax payments or VAT payments or social welfare contributions, or some member states have directly, for example, compensated consumers for events that have been cancelled and that the organizers have not themselves reimbursed the consumers. So there are a lot of general measures out there that member states have taken to tackle the economic impact, not only economic impact, but the impact of COVID on consumers, citizens, and companies. So that was in the communication of the 13th of March, where the Commission has laid down the different possibilities. So first, the general measures, but then even if they constitute aid, so they would fall within the remit of the Commission control, because in Europe, as you know, the Commission has the exclusive competence to assess the compatibility of state aid with the treaty, with the internal market rules. And here, member states may compensate, and this is within the limits of the treaty, a member state may compensate companies for the damages caused by COVID outbreak. And this is what we call the damage compensation under Article 107(2)(b), where the Commission will declare this aid compatible, provided that the aid is compensating the damage that is directly caused by the COVID, and to ensure that, and member states have to ensure that there is no overcompensation. Here also, under this article and under this kind of measures that member states may take, all kind of companies can benefit from, like banks, that this is also clarified in that communication, or companies that are in difficulty. They can also receive damage compensations, provided that their damage is caused and their difficulties actually are caused by the COVID outbreak and by all the measures taken by member states. So I was saying that we were under the damage compensation under Article 107(2)(b), where we don't have so many decisions adopted because a few member states have notified such measures. Then we go to the other possibilities that member states have if they want to design a state aid measure. So then we have Article 107(3)(b), which provides the possibility for the Commission to declare compatible with the internal market aid that is aimed to remedy a serious disturbance in the economy of a member state. This article has been used also in the 2009 financial crisis. And the Commission, in the communication from 19th of March, so the temporary framework of 19th of March, the Commission established that the COVID outbreak is affecting, is seriously disturbing the economy of all member states. Now, the aim of this temporary framework is to lay down the conditions under which the Commission will declare compatible with the treaty aid that is aimed to remedy the liquidity shortage faced by the undertakings, and ensure that the disruption caused by the containment measures taken by the member states will not jeopardize, will not put in danger the viability of companies, especially of SMEs. So the problem that the Commission has identified is that the different measures taken in this period cause a liquidity shortage for companies, and this liquidity shortage may put in danger their viability. So that's why the form and the types of measures that the Commission has identified in the temporary framework are driven from this problem identified by the Commission. So the temporary framework is applicable in all sectors of the economy and to all kind of companies, except those companies that were in difficulty before 31st of December 2019. However, as I said, the companies that were in difficulty before, they can receive damage compensation, or they can also benefit from exceptional treatment under the rescue and restructuring guidelines, provided their difficulties stem from the COVID outbreak and the measures taken by the member states. So all those companies still can benefit from aid, but under the different rules. Then the type of measures, we have different sections in the temporary framework. So member states may put in place schemes on the base of which they can grant aid up to 800,000 in different forms, like direct grants, tax advantages, or repayable advance. In the fisheries and agriculture sector, there are different thresholds. So 120,000 for fisheries and 100 for agriculture. Public, then member states can also grant public guarantees and loans. The public guarantees and the public loans may be channeled through banks. So that's why there is the section, another section on banks, where aid that may still be like what we call the indirect aid, so the residual advantage that can stay with the banks when they channel this kind of instruments like public guarantees or loans, is also declared compatible, provided that the bank is passing through the advantage to the company. I will explain what that means. So when we go to the public guarantees and public loans, the conditions are very similar to grant. So the member states have here two options. Either they charge the premium that is laid down in the temporary framework that is fluctuating depending on the guarantee maturity or the type of company. Or member states can notify another methodology, for example, using a flat guarantee for the whole duration of the guarantee period, provided that that flat rate or the other premiums take into consideration the guarantee coverage that the member states envisage to give or the guarantee period. In principle, guarantees can be given for loans, for investment loans or working capital loans, and they have to be limited up to 6 years. Again, here member states, they can foresee also a longer period guarantee, provided then the premium is adjusted accordingly. So there is quite a lot of flexibility how to set up these guarantees, and in the temporary framework we have laid down, let's say, the minimum conditions to be respected. Then another very important condition both for guarantees and loans is the volume of the loan. So the volume of the loan is limited, and public guarantees and public loans may be granted up to to certain thresholds, like, for example, the double wage bill or 25% of the turnover, or liquidity needs of the company. So these are general principles that are very important and conditions laid down. I will not go in detail. If you have specific questions, I will answer them. Then when it comes to banks, as I said, in the temporary framework, we have laid down the conditions of compatibility only for the indirect aid that may still remain with the bank if the bank, if the commercial bank is, or financial institution is channeling these guarantees and public loans to companies. So the temporary framework is not applicable. I received some of the questions where the temporary framework is not applicable to a possible direct support that is granted to the banks. So for that, still the other rules are applicable. Then aid under the temporary framework may be cumulated with other types of aid, like the Minimis or like aid under the block exemption regulation, provided all the other conditions are respected of the de minimis or of the block exemption regulation. There is a question also as regards structural funds. Yes, structural funds may be channeled via the temporary framework. So the state aid rules apply regardless from where the funds come. provided that the member state is deciding where to allocate the money. Yes, structural funds can be granted also via the temporary framework, provided then also that the conditions of the structural funds are respected. Here is a chart. I don't know if you can see very well the numbers. It's just like to give an overview of the situation on 31st of March. So how many decisions adopted and the budget. In principle, I think some of the schemes that have been notified, they don't have an estimated budget, especially for guarantees and loans. That is more difficult to quantify. And but in principle, I think the Commission has approved schemes with a total budget of 2,240 billion euros. Until now, we have received and we have approved, until the 31st of March, we have approved schemes for 12 member states. Here is an overview. We can go back afterwards. So 12 member states plus UK. We have adopted, the Commission has adopted 23 decisions, and this decision cover also several measures under the temporary framework, and only 3 decisions under for damage compensations under 107 2B. It's the link here where you can find all press releases and decisions published by the Commission. We have a dedicated website on digital competition website for COVID, where we publish the decisions once they are cleared for confidentialities with the member states. So, and under this link, you have an overview of all decisions adopted until now. My last remark, and then I will give the floor for questions, is that as we speak, the Commission is about to adopt an amendment to the temporary framework. The DG Competition has presented to member states on Monday, has consulted member states on Monday on an amendment to the temporary framework. So the temporary framework will be extended. We will have 4 new sections, 4 new 8 measures that will be declared compatible, and the conditions for this 4 new categories will be laid down in this amendment to be adopted today, I hope, today, and you will see there. I can say that what we presented to member states on Monday relates to research and development, so aid for research and development, for testing, and for production of COVID-related products. We extend the temporary framework to COVID-related products. So all the research and all the supply chain and production chain for COVID-related products, like for example, vaccines or equipment, will be declared compatible, provided the conditions will be respected. And then there will be also compatibility grounds for tax deferrals or wage subsidies that constitute state aid. With this, I will end my presentation so that you have also a bit of time to ask your questions, and hopefully I will be able to answer.
Thank you very much, Ramona. So we gave the opportunity to our participants already when signing up to the seminar to submit questions. So I would probably start there. I've tried to package them a bit together. There are a few questions which are very general, and I think to some extent you of course replied already. But I would, if you agree, I would start with the big picture questions, and then I would go a bit more into the banking BRD questions. There are some clarification questions which I think it's probably better to park them towards the end of the seminar so that we can go into the details. There are a lot of questions related to articles, and I think that this will frighten some of our participants. So it's probably better to do that in such a way. And so starting with the most general question, there is Karel Lano who was asking, with the panoply of national support schemes, don't we risk seeing a repetition of the 2008 financial crisis and the disappearance of the single market? So I think that this is really the fundamental issue at stake. Related to that, there is Bodvin who was asking, was saying that the communication by the Commission offers more flexibility with respect to state aid, but given different COVID-19 related state aid programs per member states, how will this impact level playing field within the EU market? And I think perhaps this is also an occasion to clarify how basically the EU level state aid regime interacts with the national level. Because if there were a few questions on money, for example, where does the money come from? Which I think needs to be clarified, perhaps also from the start on the interaction of that EU framework and the national level.
Yes, so I will just repeat my introductory remarks where I said that the guiding principles of the temporary framework and the aim of the temporary framework is to lay down the conditions, so the framework where member states may design different support schemes to ensure that we still keep a level playing field. Of course, state aid is not like that money comes from DG competition. Still, money comes from different sources, and you have different budgetary capabilities of member states, which is different. It's true, and that's why it's important to have rules in place to ensure that at least there is an equal treatment. But then how member states spend depends on their own budget and how much they can do. So here the state aid rules, they have a different purpose, is to ensure that when member states want to spend money, they do it according to the same rules. So at least for me, I cannot say then more about from where the money comes and what the possibilities are under, but yeah.
Thank you. So there was a question also still at quite a higher level of detail by Michele Maltese from Banca d'Italia, who was asking, who was saying the temporary framework is directed to undertakings and SMEs facing difficulties due to COVID-19 and only indirectly refers to banks. However, COVID-19 could also have direct impact on banks due to the shock that will affect the economy. Can we expect, Michele is asking, some ad hoc communication of the Commission dealing with stated measures for banks in the context of COVID-19? And let me link that question also to, there was a question also on energy. So perhaps if you could also go into the sectorial approach when the state aid is designed.
Yes. So indeed, the temporary framework lays down the compatibility conditions for aid granted to companies and only declares compatible the indirect aid that can still stay with the bank. As I said, when the bank is then managing, for example, a guarantee portfolio given by the state or a loan portfolio given by the state that is channeled through a commercial bank, still a residual of disadvantage can stay with the bank. So this indirect aid in this very particular situation is declared compatible on the basis of the temporary framework. All the rest, so aid directly to the bank, has to be assessed on the basis of the rules in place, the other rules. The sectoral rules. Now, energy and energy sector, the same. So they are still in place. They are still applicable. All the other rules. This temporary framework does not change existing regulations or existing or all the other sectoral rules. So member states have, when they design the support measures, they have to decide which of the rules they will apply. And once they have decided, then they go, for example, under the temporary framework, and then that is the one applicable, or they will go for the sectoral ones if those are still fit for purpose.
Okay, thank you very much. So we got a few questions out of our way. What I would suggest is now to enter a bit more into, so there are questions related to the BRD, the Bank Recovery and Resolution Directive, and to asset management companies. So let me just try to recap them.
They are linked to the paragraph 6 and 7 of the communication. Yes. And here again, because I see also there is another question on damages for banks. If they may receive, yes, they, banks may receive also damage compensations under Article 107.2b, and that would not be considered as exceptional public support. However, until now, we have not received a notification of such support. So, as I said, the conditions under Article 107.2b, which apply also to banks, is that there is an evaluation of the damage that is caused to the bank, and that damage has to derive from the COVID outbreak, and there should be a causal link, and to make sure that there is no overcompensation. So this principle apply also to banks, but as I said, we haven't received yet a notification of such a situation.
Okay. So there are a few more questions now live coming in. So we will go into them in a few minutes. But I think there was still a last question, which was about the interplay between the temporary framework and NPLs and asset management companies. Would you like to engage with this one?
I will have to repeat myself and say that the temporary framework is not for aid to banks. So in principle, we don't speak about NPLs under the temporary framework for banks. So all the aids directly granted to banks has to respect the sectoral rules, the banking rules.
Okay, so let's go to a few of the questions which have been formulated straight here. I think that the question by Filipa Castillo, is the Commission preparing anything to ease the application of Article 32 BRD? I think that you've covered that, or was it another paragraph?
At this moment, I cannot say more, but as you can see, in the last 2 weeks, we have been quite responsive. The Commission has been quite responsive, and whenever the need was there, we have adopted the rules that were needed.
A more general question is asked by Anna Ansens, where she says, we hear a lot about compensations for companies and banks, but how about compensations for non-profit and civil society organizations? Are these included in the Commission's communication? They are often on the front lines during the crisis and are unable to raise funds or receive less funding from donors due to the emerging economic crisis.
So NGOs can be considered as undertakings under stated rules, provided they have an economic activity. So they may receive state aid. They will have to comply with the same rules as the other companies, provided, as I said, they perform an economic activity. But the decision should come from the member states, what kind of compensation they want to give to the NGOs and to this kind of entities. So yes, they are eligible, but it's for the member states to give the compensation and decide.
Okay, great, thanks. I think that there was also Anna Stella who was asking along the same lines. There is a very practical question put down by Pavel Wisniewski, who asks, how long does it last between asking the Commission to use state aid and receiving the approval?
Yeah, we have approved we have approved notifications, I think, in less than 24 hours. So what is very important and what has worked very well is that member states, they contact DG Competition as soon as they have some ideas what kind of scheme they want to put in place. We have on the dedicated web page of teacher competition, we have a dedicated phone line, and email, mailbox, compcovid at ec.europa.eu. So we have encouraged member states to contact us as soon as possible. They have done it, and the moment we have helped member states to design the scheme, and we have approved it, I think, in less than 24 hours.
Okay. Still on this interaction, Claudia Massa is asking that there will be the possibility for the Commission to further control if the measures are compatible with the internal market and if they meet the conditions of the temporary framework after the decision has been taken. In practice, how do you anticipate things?
Once the Commission has adopted a decision, then that scheme that is approved will stay approved. Of course, what is important is that the member state indeed puts in place the scheme as approved. Now, if the member state is modifying the scheme to such an extent to look like a different scheme, then it's not covered anymore by the Commission decision. It's not a conditional decision what we approve now. So if they put in place what the Commission has approved, then it remains approved.
Okay. May I just ask Jan to put again the results of the poll, because you'd been disconnected at the time, and at the time we had asked participants to share their views on a question. I think it would be good to sort of, exactly, great. So the question was, do the aid measures allowed under the temporary framework allow companies to tackle the liquidity shortage they faced during this period? And it looks like 60% said yes, 29% said I don't know, and 11% said no. Was this a surprising result to you?
No, not really, because indeed what is happening is that business activity has been reduced or shut down in some areas, some sectors, some member states. So of course, companies actually the immediate problem is that they don't have cash flow anymore. But still, they have to continue their business or to pay. So that's the immediate problem caused by the containment measures. What I was curious to find out is that if there are also other problems that we have not captured by this temporary framework. And as I said, the temporary framework will be extended. So the production of COVID-related products will be support or can be supported by member states with state aid. So we hope that to cover also that kind of immediate needs with this temporary framework.
Okay, I'm trying to screen the new questions. There are many of them, so thank you a lot for this. I'm afraid we cannot, of course, answer every single question, but I could see that there were two questions going in the same direction from both Katerina and Fabian Bischelmeier on the possibility for precautionary recap for banks. So what would be the capital shortfall that the state aid would cover under the temporary framework?
The temporary framework does not cover recapitalization for banks. So if that is needed, it has to be notified under the existing rules, and we will see if the existing rules are fit for purpose or not. But the temporary framework is not applicable to recapitalization of banks.
Very good. I could see that there was also a question about Switzerland. So outside of the EU and in EEA, what is actually the reach of this temporary framework? If you could just guide us through that for a second.
I'm not sure I see the question here.
So Yeah, it's
Can you
earlier
please say
up.
again?
Mhm. So by the way, there was a question about also the slides and the presentation. We'll go back to you in due course to inform you about this. There was a question on the non-EU aviation sector, and there was a question on guarantees in Switzerland, essentially. But I think it goes beyond simply the instrument as such to ask about, you know, what's the applicability beyond the EU, actually.
I think they are better placed in Switzerland to answer that question. Now, what are the applicable stated rules in Switzerland?
Okay. Um, Very good. If there is any single question that you felt you wanted to answer, I would give you the floor for that. So if you can have a quick glance through as the numerous questions, and then I would I would suggest that we invest a few more minutes then into the very technical and specific questions for those of you who want to stay on for that last part.
No, for me, I think the general one, I think we have covered. I think we have several specific questions. Maybe we can go in the specific ones.
Yes, absolutely. So there was a question about, for example, maybe that's still in the general realm, about the issue of cumulation and exclusivity. Can you say something about this subject? So that's Helmar Krane asking. For example, it is unclear whether and how aid justified for the purpose of compensating for damages under Articles 107 2b and aid justified under the temporary framework are compatible with each other. So it's one of the last questions that has been submitted.
Oh, okay. Yes. So aid for damage compensation can be declared compatible under 172b. And it can be cumulated with 173b. Why? Because the purpose is very different. So the purpose under 172b, which is damage compensation, is that the state is compensating the company for the damage directly caused by the containment measure. And that was, for example, the schemes that we have approved are linked to organization of events. So if the state has taken the decision to annul all public events, then the state also compensated the consumers directly of like the clients of that event or the clients participants of that event directly. And that was actually a burden taken from the organizer, so they didn't have to repay, but then the state had to repay. So then that kind of mechanism can be approved under 172b. Also, some airlines can be compensated. We have not a decision yet on that. But so under 172b, it's a damage directly linked to a measure taken by the state because of the COVID-19. Now, 173b, it's much larger because under 173b is we look at all the measures the state have taken. They do have an impact on the economy. Not a direct link, but they still impact the economy and the undertakings, right? So this kind of more general measures, they can be approved under 173b. So one thing is to be directly for a very particular instance under 172b, and then you can still receive as a company, you can still receive, for example, a public loan to cover your liquidity needs during this period. So they are the two can be cumulated. provided, of course, that we speak about two different kind of measures, so not for the same thing. You cannot be compensated twice for the same thing.
Okay. Thank you. So I think there is a question that relates to de minimis thresholds and rules. Could you just, for the broader audience, highlight in just a few seconds what is actually de minimis? Because I'm not sure it's clear to everyone, and then we'll go into the question.
Yes. So de minimis is aid that is below 200,000 euros that is considered not to affect trade between member states. So the minimis aid is actually falls outside the notion of aid, provided certain conditions are respected. So in the EU, we have, let's say, the threshold of 200,000. So everything what is above 200,000 falls within the remit of state aid control. What is below 200,000, let's say it's outside. Still, certain rules have to be respected. Now, under the 200,000 threshold, loans and guarantees can also be granted. That is true. Now, the methodology to quantify, let's say, the aid element or the advantage in this loans and guarantees granted on the basis of the minimis is quite specific under the de minimis regulation. So under the de minimis regulation, loans up to 1.5 million or guarantees for 1.5 million euros can be granted and considered to fall below the 200,000 threshold. So member states can also choose that. They can choose to put in place now guarantees and loans on the basis of the de minimis regulation. That is also possible. However, not all member states have a methodology to quantify exactly the aid amount, so it might be not sufficient. So in the temporary framework, what we say, we don't quantify the aid. We just say that if they apply the premiums that are in the temporary framework, the loan is, or the guarantee actually, contains an aid element. We do not quantify the aid element in the guarantee or in the loan under the temporary framework. So that's why then the duration, or actually the amount of the loan, can be higher than under de minimis. Not always, but it can be. So de minimis and temporary framework can be cumulated, but then you respect the conditions of the de minimis regulation. And in the de minimis regulation, it is said that de minimis may be cumulated with other risk finance, like with other loans and all that. But then please read the conditions of the de minimis regulation and ensure that the accumulation rules are respected.
Thank you. So I think there were two questions on this, which you've, I think, for most part addressed, because I think they were related also to the calculation and the quantification. I think we have time for one or two more questions, and we'll try to please.
Yes, maybe I want to answer also one of the questions, because that is also from member states that we have received questions as regards that, to clarify. So the minimis regulation is not amended via the temporary framework. So the 200,000 threshold remains as such. So the de minimis regulation stays in force. We do not modify the de minimis regulation. However, we provide for compatibility rules under the temporary framework for aid up to 800,000 euros.
Okay. Very good. So then there were a few questions as to, so there was a question by Lucas Cascarelis, who was asking very specifically, but I think we can engage with that since you must know the text almost by heart. On paragraph 7 on page 2, so there is, he's asking basically how the measures to support the economy could be illustrated with a practical example in terms of implementation?
I think that the example, I cannot give an example under paragraph 7 because the paragraph 7 refers to recapitalization of banks. And the temporary framework is not applicable for recapitalization of banks. So I'm afraid I cannot give an example there because it falls outside these rules. The aim of this paragraph 7, as I said, was to clarify that if banks would need such a direct support, then all the other rules will have to be respected. But it's not that we interpret or we apply the directive in this temporary framework.
Okay, perhaps the last question on, so Umberto Daros is asking, could you please elaborate on the recovery of the damage compensation aid?
Recovery, I guess you mean like under which conditions you can get a damage compensation, or I guess that should be the question because otherwise. So for damage compensation under Article 107(2)(b, the Commission we have published on the website also of DG Competition of the COVID website. I can provide you also with the link of that. We have published guidelines for member states, what kind of information to provide us with under that article, and then how to quantify the damage and the causal link. The Commission has some case practice under the damage compensation because that article provides also for compensation for natural disasters. And we have developed also conditions and in the case practice for natural disasters. And based on all this experience, we have drafted that paper on the website to give guidance to member states how to identify the damage, to quantify it, and to establish the causal link between the damage and the COVID measures. Actually, there are possibilities. Member states they can also put in place clawback clauses. So if they are not able to quantify ex ante, let's say they compensate and provide it. And if they cannot determine the parameters in advance, then they can put in place an ex post mechanism. So if the measure, if the aid would lead to overcompensation, then they have the possibility to claw it back.
Okay. Thank you so much. Perhaps just a curiosity for the looking forward and looking at the real economy effects, which can only be at this stage anticipated and assumed. There have been a few discussions in the press, both in France and in Italy, on possible nationalizations in the future. So I'm not a lawyer. I wanted to ask you, what frame is actually applicable then if nationalization happens? Is it still state aid, or is it the services of general interest? So which way would you then sort of frame at the EU level and guarantee a level playing field?
It's a very good question. Personally, if I can brainstorm with you, how I would assess it, I will start from the compensation granted by the member state, because if there is no compensation as such, like there is no transfer of public resources, we are outside of state aid control. So state aid control kicks in if there is a transfer of public resources to a company. So in the nationalization processes, in principle, there is a compensation mechanism. So there are different ways how to do it. Of course, they can put in place an SGI, a service of general economic interest, and a compensation, an entrustment of a service of general economic interest on a company and to compensate that company for their costs. So yes, I think SGI can be a route for that.
Okay.
Yeah, let's
Time will tell. Ramona, thanks a lot. I know there were really plenty of questions, and I think we tried to address in the limited time we had most of the questions that we could address. Obviously, you need to bear in mind that almost 400 participants were on the seminar. Thank you to all the participants, and thank you to you, Ramona, for teaming up with us on this in this occasion. I wish you all the best with not least with state aid and the framework, and I hope to have you soon back on the platform or indeed in Florence.
Indeed, I hope so too. Stay safe, all of you, and yeah, I hope I have answered most of your questions. And follow the news today, because as one of the question was if I can list again how the temporary framework will be amended. At this moment, what I can say is only what the commissioner said in her public statement on Monday, which is also published on our website, but the college is now discussing and will adopt soon, I guess, the amendment. So I cannot prejudge that. Of course, but what I can say is what is in the public statement of the commissioner of Monday, which is that what we proposed to member states is to extend the temporary framework for research and development, aid for research and development for COVID products, so to develop COVID products, then to test the COVID products, so aid for testing and upscale infrastructure, aid for investment, so mass production of this COVID products, and then aid in form of tax deferrals and aid in form of wage subsidies. So this is what we have proposed to member states, and as I said, the college will decide soon.
Very good. Thanks a lot, Ramona. Have a good afternoon, and I wish the participants, of course, to come back on our platform next week on Friday. And there are also other upcoming events which we'll share with you very soon. Thanks again. Bye-bye.